Hey, good morning, everybody. Welcome to another day of Mark Report brought to you by Mike Bjork. Today is Hump Day, and it's July 30th. Again, summer's going by really fast here. We got a couple economic news releases today, all important ones here, so we're going to jump right into it. We had the ADP employment. So that means Friday we'll have the Bureau of Labor Statistics economic employment numbers coming out, so that will be a big day. But today we got the ADP on the private jobs numbers. So we had 280,000 back in June, and this month in July we had 218,000 new jobs created. So a pretty big drop off from right there. But on the second hand, we got a pretty important number here. We got the GDP for the second quarter. There's three reports. This is the initial one, and then they have a revised one, and then the final revision that will come out in September. So again, these will be important numbers. So we had to remember back first quarter was affected by the severe weather we had back east, and so it came in at a final revision of negative 2.1%. So the forecast for the GDP for second quarter was 3.2, and it came in at a whopping 4%. So it rebounded so far on surface very nicely. So we'll have to kind of see what the final revision comes out in about 2 months here. But so far it's looking very good here. So it's a good start, especially after the lousy first quarter. Later today, as we talked about yesterday, the Fed had started their meetings. Today is the final day for their meeting, and by 11:15 Pacific Standard Time, the Fed will give their announcement. So the market's going to be a bit tumultuous a little bit this morning here, primarily because they're going to be anxious with these good economic reports, especially GDP coming at 4%, and some of the job numbers have been coming out, the inflation rising. Are the Fed going to be raising interest rates sooner than expected? Because the forecast was the projection for raising of the interest rates was supposed to be second half of 2015, but these numbers look like they're going to be on pace to hit it much sooner than they anticipated. So, which could bring to the question: is the Fed going to go ahead and raise it sooner? There's also they want to see if they keep the same pace of the bond purchasing, that they are reducing it and they'll wrap up by October. So far, that's been the pace that they're supposed to finish up their purchases for the bond purchase. But also, they're going to probably listen for if there's any comment about are they going to continue reinvesting in the purchase of those bonds. Now, Janet Yellen has made comments that she's not really sure if the housing market is yet in strong footing. What meaning that we start off really hot like last year, but things have slowed down a little bit. There's some markets that are slower than others, and she's wondering if this is going to be sustained for a period or if this was just kind of a blip and it was just like a 1 year moment. Right now, market's still been pretty good, but it's not. It's going. Home prices are going up, but just not as rapidly as last year. So. And it depends. I guess every market's going to be a little bit different. Some are going to be a little hotter than others, and some others, homes will probably sit a little bit longer. But in any case, let's go ahead and take a look at the headline news here. We got the stock market here is a little mixed heading in there. Nasdaq was the only one that was actually up so far this morning. So we'll have to kind of once the announcement comes out, you'll see some more movement in the stock market as well as the bond prices. So we had a huge pullback actually, as you can see here in the bond market here, which is so we're just down to 102, 102.03 almost, 102.104 or 102.04 basically. So that means basically worse pricing for today. So interest rates have crept up a bit since yesterday. So gotta be very cautious. This could improve after the Fed meets and gives their announcement. So we could see improvement later in the day, or it could be after effect tomorrow. Maybe it rebounds a bit tomorrow, depending on what's been said. All right, folks, have a wonderful day. Just be very cautious today, as interest rates could fluctuate in terms of what the Fed says. There's a lot of uncertainty as to how they might proceed with the new given data. They don't know if they're going to remain hawkish or they're going to still remain a little or get hawkish or or remain a little bit of dovish here. All right, have a wonderful day. Thanks for watching, and we'll look forward to seeing you guys tomorrow.